Hello, my name's Joe Scaife. I'm the Head of Audit here at Bishop Fleming. Today I'm going to be speaking to my fellow colleague, audit partner, David Butler. David is the author of the Benchmark Report, has been doing this for several years, and today we're going to be covering the overall financial position and what's being covered in that Benchmark Report. David, how has it been going? What's the year been like?
It has been a really, really interesting year. From an educational perspective, it's been really challenging. Schools have been open, they've been closed, there's been all sorts of demands on them. But from a financial perspective, it has been a record-breaking year. I mean, the schools have never made larger surpluses. I mean, it's not the same in every single school, but on average, it has been financially the biggest surplus year we've ever seen.
And did that come as a surprise to you?
It did come as a surprise, yeah, because certainly when we're talking to the clients we deal with, what we were seeing was that in autumn 2020, when the schools were all open, all of a sudden people were going off with COVID and loads of schools were spending lots of money on supply costs. So all the profits they made in the previous year seemed to be getting lost. But then as soon as the schools closed down after Christmas, all of a sudden it became clear it's much cheaper to run a school when it's closed than when it's open. So pretty much the profile seemed to be schools made large deficits in the autumn term, followed by large surpluses in the spring and summer terms. And so all of a sudden, at the end of the year, they had a much bigger, unplanned surplus. So you look at the balance sheets now; they've got more cash, they've got bigger reserves than they've ever had. But yeah, that was all unplanned. So it was a surprise to us, and it was a surprise to most of the trusts we deal with.
And is the overall headline of the reserves are higher than they were the year before? Is that the same in every type of academy trust, single academy trust, multi-academy trust?
Not quite. Certainly, if you look at the single unit academies, it's been a much more balanced year. So for primary single units, actually their free reserves has fallen, only ever so slightly, but it has fallen. If you look at secondaries, theirs has gone up, but not by a huge amount, but it has gone up. It's when you look at the multi-academy trust, that's where the real increase has been. So their in-year surpluses are more than doubled in the year to well over £400,000 on average. So that's where the big increase is, and clearly the MATs have got an awful lot going on in there. They've got a mixture of secondary schools, special schools, primary trusts, but at the same point they're getting bigger, they're getting more centralised, and they seem to have had the benefit of that centralisation, and the way they've structured themselves has made them more efficient. So all of a sudden, they're the ones showing the positions of real financial strength.
So what's the key message there for any of the trustees at these multi-academy trusts or single academy trusts?
Well, certainly for the multi-academy trusts, say financially it's been a very good year, but the unknown thing, I mean, in what we said in our report is, although it's been a very good financial year, the future is really uncertain. And there's an awful lot of trusts have got plenty of cash on the balance sheet now, but that's in many ways that's because they haven't been able to spend it. So they've had money given to them to spend on capital projects, and they haven't been able to get builders to come in and do the work. They've been given money to spend on COVID catch-up, and they either haven't been able to get the teachers in or the supply staff in to help them to spend that money. And so you've got lots of schools all chasing the same sorts of people to spend money on the same kinds of things. So it's going to be very difficult for them to actually spend some of those funds they have. Inevitably, that is going to end up increasing costs. There's lots of inflation in the economy at the moment. You've got energy costs going through the roof. You've got staffing issues in an awful lot of sectors, and certainly when we talk to our school clients, trying to recruit is pretty tricky at the moment. And certainly you look at supply, trying to get hold of good supply staff is very hard. And the likelihood is, if everyone's chasing the same sorts of people, the price of those people is going to go up. So although it's been a very good financial year, and as at the balance sheet date, lots of trusts are sat there with the healthiest balance sheets they've ever had, yet the future is really uncertain, and it's very difficult to predict what the next few years will be like. But clearly, there will be more costs coming through the system.
Do trustees need to be considering their reserves policy?
Yeah, they always do. I mean, it's what's happened this year is because it's been an unexpectedly good year. Lots of the trusts are now in excess of their reserves policy, so they need to explain what it is they're going to do with the money they've got. If you've just got lots of money sat on the balance sheet and your reserves are way in excess of your policy, it's a fair challenge as to why you're not spending the money. So clearly, lots of trusts will be thinking about how they're going to be spending that money in the next few years, which will probably bring them back into line with what their stated policies are. But it's always important for trustees to think about the policy, what they should be holding in terms of reserve, and why they're holding it. One of the interesting things we've seen this year is with multi-academy trusts, is that when you look at the largest multi-academy trust, they are holding a smaller reserve per pupil than the much smaller multi-academy trusts. So either there have been economies of scale and the risk has been spread, and therefore they don't need to hold as much a reserve, or they've actually just been better at spending it. And because they are more diversified organisations, they've been more comfortable holding a level of reserve in the first place.
And have you seen any correlation between the level of centralisation in a multi-academy trust and the size of the reserves?
We'd seen that in previous years when we looked at the numbers. This year, what we've seen is that almost all the trusts within our sample have now centralised. It's something like 95, 96%. So there has been a real move towards centralisation, which wasn't there 2 or 3 years ago. So actually that distorts the numbers because there are very few within our sample that aren't fully centralised. But those that aren't centralised, by and large, are the much smaller mats. And so going back to the answer I gave a second ago, yeah, clearly some of the smaller mats have got higher levels of reserves because they are riskier. But there's a whole host of factors in there.
And is there anything that anybody needs to consider as they're going through the budget process now for the following year?
So as I mentioned, it's a really uncertain time. One of the questions we ask is when we're collecting the data is about the 3-year budget forecast, just to understand what the trusts think the future is going to look like. And actually, one of the interesting points is normally schools are predicting a financial Armageddon in year 3 simply because they don't have the data, and so they're fairly pessimistic. This is the first time ever we've seen in year 3 schools still predicting an average in-year surplus. It's really tight. It's only just a surplus, but it's the first time that's ever happened. But clearly going forwards, there are uncertainties over what income's going to look like. There are clearly uncertainties over what energy costs are going to be. There are uncertainties over what staffing levels are going to be and whether supply costs are going to go up or whether support staff costs are going to go up. So yes, there is an awful lot of uncertainty in the future. And so those are the sorts of things that the trustees trust needs to be considering. And also with pension schemes, the likelihood is that the contribution rates into both the teachers' pension scheme and the local government pension scheme will go up in future years. And when you talk to actuaries, some of them are predicting some pretty substantial increases. So those will need to be factored in. It may well be the TPS increases are funded, but probably LGPS won't be.
Okay, great. Thanks very much, David. Uncertain times ahead, but thanks very much for giving us that overview.
Thanks, Jay.
Thanks very much for watching. If you've got any questions, please contact your usual advisor.